following that bust in the second half of this decade, I think you've got a huge gold and silver run coming, and I mean huge. So, but might call for a pre-bust, meaning between now and middle of next year, I think gold can get to 3,000, and I'm probably conservative. These are again in dollar terms. I think silver can get to my target is 60, and I'm saying now I wouldn't be surprised if it went to 75.
Yeah, and I think we've seen that throughout, all the markets recently. The sort of lead up to a Fed announcement has almost dictated how the money flows are going, and there's been some insane, almost intraday volatility in some aspects, given a certain phrase or a certain way that someone's unpacked something they've said, and you sort of got the sense that it's slightly reduced how much it's impacting it, given the vast amount of numbers that are coming out, and you look to inflation coming down, and that then leads to hopefully interest rates either being, as you said, put on hold or waiting. But it's all a matter of, as it all unfolds. But if you're looking at like the catalysts or where, the drivers are going to come from in which almost sectors, like we look at precious metals in particular, gold at the moment, from an Australian perspective, it's at all-time high on the Australian gold value. It's not really as hyped over here, but even in the US the other day, it's broken through all-time highs, and that almost then feeds into silver having an incredible run as well. So I want to know your thoughts on what potentially unfolds in the precious metals markets as we sort of go towards this bull run. And then conversely, if that does unfold, wouldn't gold necessarily be pulled back as, it's no longer the safe haven? Or what's sort of rolling through the heads when you're looking at those things?
Yeah, interestingly, you bring up that it's all in the eyes of the currency beholder. So
Mm,
if you're in Australia, you say, "Wow, gold's been on a great run," right?
mm,
If you're in the U.S. and particularly silver, gold and silver probably have done well there. But if you're in the U.S. when the dollar's been strong, gold and silver have not done well at all. They had a great run first decade of this century. From 2001 to 2011, gold went from $250 to $1,900, and basically we're just above that level now. So you spent more than a decade in a sideways to down consolidation. You did have a run in 2016. You did have a run in early 2020, first half of 2020. But if you look at it, it's been basically for the last 4 years or last 3.5 years, has been a, you know, sideways to down consolidation. And it's caused a lot of people in this country, probably less so in places where your currency has been weak,
mm.
um, and the metals have done well. But in this country, the gold bugs and those who had always looked at the metals as something they liked, particularly after the great run in the first decade, um, people that have run away from it. So it's lost its luster. Crypto's the place to be now, or it just, it's a dinosaur. It's not going to work, and it's not that at all. It's really, the dollar is the key, and of course we had a big bear market in bonds, so the interest rates went up a lot, and that also hurts it. So, um, and, I look at everything through the prism of the U.S. And so I'm going to speak in terms of that. Really, it's going to be gold and silver are going to be big players in this melt up, and then calling for a bust and an 80% bear market in the U.S. following the melt up. And during that period, they'll get hit hard again, as most assets will. It's going to be a global bust, so every assets around the world are going to get hit. But then following that bust in the second half of this decade, I think you've got a huge gold and silver run coming, and I mean huge. So, but might call for a pre-bust, meaning between now and middle of next year, I think gold can get to 3,000, and I'm probably conservative. These are again in dollar terms. I think silver can get to my target is 60, and I'm saying now I wouldn't be surprised if it went 75. So again in dollar terms. Now silver right now is It got up to 26 recently. Just a short while ago, it was down in, down at 20 or thereabouts. So 2021. So, it's had a run. Um, gold's obviously, as you said, right near its high in US terms, and had a, Monday morning had a breakout to new highs, and that reversed quickly, and that spooked the
Very
markets.
volatile day. Yeah.
Yeah. Yeah, so and that's actually what happens a lot. I think Australia tends to, we had a nice run last week, and it was right near breakouts, so Australia took it out. But they're thin markets, and they,
Mm.
speculative markets, they can mislead you. You run right into it at the top, and then reverse it. That happens so often. So, I've got some guys that follow me from Australia, and they go, "Yeah, yeah, this happens. You guys, we see this all the time. It's a
Yeah.
thin market over here." So, but I think the consolidation here is going to be short, and I think gold in very short order, meaning could be a few days, could be a week, but will be at new highs and on its way. Silver has to get through a lot more because it peaked out at 48. Um, I don't know when that I guess that was back in, I don't remember, but it's been, several years. Um, and so, you have to get, from 20 24 5 6 to get up to 48, a lot of overhead resistance you got to get through. So it's going to outperform gold ultimately. And
Mm.
if it goes to 60 or even possibly 75, obviously it's a much bigger run than gold from, you know, 2100 to 3000. But it's, it's got more stair steps to get through, before you get there. But I do think both of them are in great shape here. The bears are coming out because they go, here we go again, lifted its head and it's going right back down again. So it's kind of Pavlov's dog, you've got everybody trained to be skeptical about the metals because they've
Mm.
disappointed so many times. But I think this is different. And the big reason it's different is because the dollar, I think, is rolling over. And it's bounced here in the last week, so it's giving people a little concern. Looks to me like you might have a little more upside in the dollar, and then your next stop, probably, it might go up to 104.5. But next stop is probably DXY, probably down around 100 and then ultimately mid 90s. And I'm calling for the dollar down to 80. So that's what drives gold to 3,000, maybe 3,000 plus, and drives silver to 60 or 75. And miners are even more frustrating than the metals, and I think they will obviously have tailwind when the metals start moving.
Yeah, we see it. Again, I cover a lot of the small cap market in Australia, and in particular, the gold producers are loving it in Australia, but the small cap explorers looking for gold are struggling, and there's this massive divergent because the gold producers are making good cash, and of course now looking for opportunities, and the explorers can't get any sort of love. And there's this real, well, interesting opportunity phase emerging in Australia for yeah M&A and some of the other activities, but.
What we see and people don't realize, I think, too often, at least people that aren't in it all the time, um, the search, the exploration development companies, there, there's no earnings.
Mhm.
And if metals stay down here, there's not going to be any earnings. So they tend to not, people play them. The ones that are close to them will play them for little trades and things, but there's no long runway when the metals are stuck in kind of tight trading ranges. Once you get that breakout, and those are big moves. I mean, especially silver, but gold too. To break out and go, $900 in a matter of months. That's a huge change. We're talking about something that doesn't happen often. When you get a run like that, there's there's limited supply of these metals out there, and it's getting harder and harder to find them in places where you can extract it um, in a profitable way. So, but once you realize you've got a higher threshold in terms of the price you can sell it at and the price you're going to be able to realize on it, those higher costs can still be profitable. So even though, yeah, and they're obviously these mines often are in places of high risk, so that has to be factored in. But when you get these runs in the metals, all of a sudden you got these companies that are sitting on, not to mimic the ad over here in the States, but sitting on a gold mine, and, and it's, you can start saying that these things, not only investors, but the bigger companies can start saying, hey, here's where we got to pick up some more assets because we now see that the prospects are picking up. So you'll see more M&A activity. You'll see a lot of those exploration and development companies get bought out or certainly bid up.
Mm,
So I think we're on the verge of one of those. We get them every few years, as you know. One of
mm.
those times when the run in the metals can really kind of add excitement to the whole sector.